Stop whatever you're doing. This can't wait. $15 trillion. That's the amount that vanished from the gold and silver markets between Thursday and Friday of last week. 15 trillion. To put that in perspective, that's half the GDP of the United States. That's more than Apple, Microsoft, and Amazon combined. Gone. Poof. In 48 hours. And the media tells you it was a correction, that the market adjusted, that investors took profits, that everything is normal and healthy. Sure thing, buddy. And I'm the King of England. Look, Carter's been doing this for 12 years. 12 years watching how this circus works. And I'm going to tell you something you won't hear on any news broadcast, on any mainstream podcast, on any financial channel with suits and teleprompters. Money doesn't evaporate. Money doesn't disappear. Money doesn't go to some heaven for banknotes. Money changes hands, always, without exception. And today, this morning, while I was reviewing COMEX data with my third cup of coffee, I figured out exactly where those 15 trillion went. I figured out who was buying when you were selling. I figured out who was waiting on the other side of your sell order with a smile, a giant bucket, and a whole lot of eagerness to scoop up your position at fire sale prices. I'm Carter. It's Monday, February 2nd, 2026. And what I'm about to tell you isn't some conspiracy theory from some random YouTube channel. This is public data. Official documents. COMEX figures that anyone can verify. It's just that nobody bothers to connect the dots. Well, almost nobody. Let's start with what happened this morning, because if your stomach isn't churning yet, give it 5 minutes. Early this morning, while you were sleeping peacefully, the Asian market opened and it was a bloodbath, an absolute massacre. Gold touched $4,400 an ounce. $4,400. It had been at $5,600 on Thursday. Do the math with me. That's a drop of $1,200. In less than 72 hours, $1,200 per ounce. If you had 10 ounces of gold, you lost $12,000 while you were dreaming about your summer vacation. But wait, silver was worse. Much worse. It touched $71 this morning. 71. On Thursday, it was at $121.67. Its all-time high ever. Grab your calculator. That's a 42% drop from the peak. In 3 days. Not 3 months, not 3 weeks, 3 days. Silver ETFs in India hit the lower circuit breaker of minus 20%. The protection circuit tripped. They literally couldn't fall any further because the system wouldn't allow it. Imagine that. Imagine waking up in Mumbai, half asleep, coffee in hand. You open your broker app and see that your silver investment has lost a fifth of its value while you were sleeping. The panic was total. Social media was on fire. Twitter was a funeral. Reddit was a horror movie. Everyone screaming that it's over, that the bubble burst, that you had to sell whatever was left before it hit zero. And now here's what kept me up last night. What made me get out of bed at 4 in the morning to verify I wasn't hallucinating. You know what happened after the panic? Just hours after hitting that low of 4,400 in gold, the price bounced. It bounced hard. It climbed to 4,750. That's an 8% move to the upside. In a matter of hours. Not days. Hours. Silver did the same thing. From 71 to 78. A 10% rally after the massacre. The silver ETFs in India that had hit minus 20% recovered 10 points. In one session. Stop. Let that sink in for a moment. If everyone was panic selling, if the media was saying the rally was over, if CNBC analysts were screaming this was the end of the bubble, if your brother-in-law was texting you told you so, then who the hell was buying? Because there's a fundamental law of markets that nobody can break. For the price to go up, someone has to buy. There's no magic, there's no trick. Someone puts money on the table and says, I'll take it. And this morning, someone bought. Someone bought millions and millions and millions of dollars worth of gold and silver at exactly the moment when panic was at its peak, exactly when your broker was sending you red alerts, exactly when logic told you to run for the exits. Who has that kind of capital? Who has that information? Who has those reflexes and that ice in their veins? Keep that question in your head. We're going to get to the answer, and when we do, it's going to blow your mind. Friday, January 30th. 2026 will be studied for decades. Gold fell 11% in a single session, its worst day since 1983. Silver plunged 31%. Read that again. 31. Its worst day since March of 1980, when the government stepped in to crush the Hunt brothers, two Texans who tried to corner the silver market. They ended up controlling a third of the world's supply, and the government changed the rules to destroy them. They raised margin requirements until they couldn't pay. Last Friday, we saw the biggest drop since then. Curious timing. If you had $100,000 in silver on Thursday night, by Friday night you had $69,000. $31,000 gone while you worked, while you ate, while you dropped your kids off at school, while you lived your life without knowing you were being fleeced. And what was the official trigger? They've repeated it 1,000 times this weekend. Kevin Warsh. Trump nominated Kevin Warsh as the next Federal Reserve Chair to replace Jerome Powell in May, and the media sold you the perfect narrative. Warsh is a hawk. He's going to tighten monetary policy. He's going to strengthen the dollar. He's going to drain liquidity from the system, and that's why gold and silver fell. Because if the dollar strengthens, metals go down. Basic economics. Clean narrative. Easy to understand. Perfect for a 30-second headline. Perfect for the viewer to nod along and say, ah, right, makes sense. And it's completely incomplete. It's like saying the Titanic sank because there was water in the ocean. Technically true. Absolutely useless for understanding what really happened. Because here's what they're not telling you. Listen carefully. Warsh has publicly stated, in recent interviews you can look up right now on YouTube, that he supports lowering interest rates. Trump picked him precisely because he wants lower rates. Trump has spent an entire year, 365 days, pressuring Powell to cut rates. He's called him incompetent. He's threatened him. He's opened a criminal investigation against him. Why would he pick a hawk who's going to do the opposite of what he wants? Is Trump stupid? You can think a lot of things about Trump, but stupid isn't one of them. He didn't pick a hawk. He picked someone who talks like a hawk in public but will act like a dove in private. Same game as always. Say one thing, do another. So why did the market react like a monetary apocalypse was coming? Because it wasn't a reaction to the nomination. It was an excuse. The nomination was the match, but the gasoline had been building up for months. Let me explain the gasoline. The market was loaded to the gills with leveraged positions betting against the dollar. They call it the debasement trade, dollar devaluation. The thesis was simple. The United States has $38 trillion in debt. It's going to pay over $1 trillion just in interest this year. The Fed is going to have to print money to pay the bills. The dollar is going to devalue, and gold and silver are going to the moon. Everyone was in that trade. The hedge funds, Chinese speculators, retail traders who watched a TikTok video, everyone long gold. Everyone long silver. Everyone short the dollar. Everyone going the same direction. Everyone on the same side of the boat. And when you have everyone on the same side of the boat, all you need is one little push to flip it over. The Warsh nomination was that push, not because it changes anything fundamental, not because it's going to destroy gold, but because it gave the perfect excuse to trigger the liquidation cascade. And this is where the story gets dark. The CME Group, the company that controls the COMEX where precious metals futures are traded, raised margin requirements Thursday night, before Friday's market opened. Impeccable timing. Gold went from 6 to 8% margin, silver from 11 to 15%. This isn't some boring technical detail. This is the mechanism of the crime. Let me explain it like you're 5. If you have a leveraged position, you're trading with borrowed money. The margin is the collateral you put down. If margin requirements go up, suddenly you need more money to keep your position open. If you don't have it, your broker liquidates you automatically. They don't call you. They don't ask. They don't give you options. They sell your position at whatever price and send you the bill. And Friday morning, with Asian markets closed and liquidity at rock bottom, the liquidations started. The price of gold fell, which triggered stop losses from the most nervous traders, who sold, which made the price drop more, which triggered stop losses from other traders, which caused more selling, which pushed the price down further, which generated margin calls, which forced more liquidations, a cascade, a domino effect. One algorithm feeding another algorithm in a spiral straight to hell. It's like yelling fire in a crowded theater. Doesn't matter if there's actually a fire. Everyone rushes to the door and tramples each other. And while retail traders were getting slaughtered, while small funds were receiving margin calls they couldn't pay, while panic spread like wildfire through a dry forest. Someone was buying. Someone with very, very deep pockets. Someone who knew exactly at what price
precious
the bleeding
metals
would stop.
complex
Before the reveal,
and what
I
lies
need you to see
ahead.
the clues that nobody connected.
As I'm recording
Because
this,
isn't
just
Carter,
moments
the
before
YouTube
the markets
lunatic who sees
close,
conspiracies
all
everywhere,
metals are
talking.
sharply higher
This is
today.
public data that's
But
right
silver
there for
is
anyone who wants to look.
absolutely
First
exploding,
clue,
surging
on
more
that
than
same Friday,
6%.
January 30th,
We're going
the
to
same
walk
day as
through the
crash,
performance of all
Metropolitan
the precious
Capital Bank
metals
and Trust of
because
Chicago
every
failed.
single one of them has moved
$261 million in
significantly.
assets.
And we'll
The
also discuss a
FDIC
very
stepped in,
important
citing
number
unsafe
that gives us
conditions.
insight
It's the
into
first
where
US
silver
bank to
and
fail in
gold could be headed
2026.
next.
First bank
What
of the
makes
year.
this moment so
And it failed the
important
same
is
day
not
precious
just the
metals
size
suffered
of
their
the
worst
move,
drop in 45
but when
years.
it's happening.
Coincidence?
Silver
Sure.
isn't breaking
Second
out
clue.
during
The
market
New
panic
York Federal
or a
Reserve
financial
injected over
crash.
$60 billion
It's
in
breaking out
emergency liquidity
while
between
stock markets
Friday and the
remain
weekend.
relatively
$60
calm
billion
and
in
risk
emergency
assets
repo
are still
operations.
near record
For those
highs.
who don't know what a repo
That kind
is,
of divergence
it's basically an
is
emergency
extremely
short-term
rare
loan for
and
banks that need
historically
cash right
powerful.
now. Who did they
It
lend $60
suggests
billion
that
to?
smart money is
They don't
positioning
say.
early, not
They never
reacting
say.
late.
But someone on
When
Wall
silver
Street
begins to
desperately
lead
needed
under these
cash the same day
conditions,
the metals
it has
market
often
collapsed.
marked the beginning of a
Third
much
clue. While your
larger
screen
and
showed
longer-lasting
silver at
move
$78,
that very few
in
are
Shanghai, the
prepared
physical
for.
price was trading
Gold
at
and
a
silver
12 to
are moving
13%
higher today,
premium over
largely
Western
in
spot.
response
In
to
Dubai, the premium
geopolitical
was
developments,
40%.
particularly
In
this
Japan,
weekend's
premiums
U.S.
of
action
60
in
to 80%
Venezuela
were reported
and
on
broader
secondary
global
platforms.
tensions.
The spread
While
between the paper
Venezuela's
price and the
leadership
price
has
of
now
real
been
metal,
captured,
the kind you can
the
touch,
bigger
the
story
kind you
is
can
how
keep in your
precious
safe,
metals
was the
traders
widest
are
in buying
reacting to
history.
the
The COMEX
uncertainty
price said
this
one thing.
creates.
The price
And
of
that
reality said
uncertainty
something
is likely
completely
to
different.
ripple through
It's like
global
the
markets
thermometer
for
saying
months
it's
to
68
come.
degrees, but you're sweating like
We
you're
still
in a
need
sauna.
clarity
The
on how the
thermometer is
United
lying.
States plans to manage Venezuela
And now
and its
comes the
vast
revelation.
natural
What I
resources.
found this morning, going
There's
through
an
the
old
COMEX
saying
data,
on Wall
what made
Street
me
that
record this video
bond
instead of
traders
going to
are
the
the
gym?
smartest
What
people
left
in the
me
room.
staring at the screen for 10
That may
minutes
often
without
be
blinking?
true, but right
JPMorgan
now,
Chase,
precious
the
metals
biggest bank in the
traders look
United
like the
States,
real
the bank
forward
with the most
thinkers.
power on Wall Street,
While
the
stock
bank that
markets are
moves markets
largely
with a
brushing
sneeze.
off geopolitical
JPMorgan closed
risks,
short positions
with
in
some
silver
global
worth $10
indexes
billion.
hitting record highs,
$10 billion.
precious
But that's
metals
not the
traders are
outrageous
looking
part.
beyond
The outrageous
today
part is when
and
they did
asking
it,
what these
and
events
at what
mean for the
price.
months ahead.
According to COMEX
This is
delivery
especially
data, public
important because
documents you can
silver has
download
now
right
been
now if you
officially
don't believe me.
classified
JPMorgan
as a
liquidated
strategic metal.
633 delivery
That
notices
changes
for
everything.
silver. All of them.
President Trump has
Every
warned
single one.
Central and South
At a
American
price of
nations over illicit drug
$78.29 per
trafficking
ounce.
and has
Stop.
made it clear
Breathe.
the U.S.
Think.
intends to reassert
You know what price
influence in the Western
78.29
Hemisphere.
is?
This
The
ties
exact
directly
low of
back to the
Friday,
Monroe Doctrine,
the lowest
first
point of the
established in
entire crash, the
1823,
moment of maximum
and now
panic,
effectively
the
being
precise instant
reactivated.
when retail investors
Some
were
are even
selling
calling
everything
it
they
the
had because they thought the
Monroe
world was
Doctrine.
ending. At
This
that
shift has
exact
serious
moment, with
implications
surgical
globally,
precision,
particularly
with
for
sniper
China
timing,
and Russia,
JPMorgan closed
both
$10
of which have
billion
been
in
expanding
short
their
positions
influence
by
in
buying
countries like
silver at
Cuba
the
and
lowest price
Colombia.
of the year.
There's even
Not near the
speculation
low,
that Cuba could see
not
major
approximately
changes
at the
soon.
low, not
Whether
more
that
or less
happens
in
or
the
not,
zone of the low.
markets are
At the
reacting as
exact
if it's
low,
possible,
78.29,
and that reaction is being reflected in
633
precious metals
contracts,
prices.
all at the same price.
Gold is up nearly
Let that sink
1%
in.
today,
Let me
gaining
break it down quick. When you're
$44.90
short, you've
and
bet that the
approaching
price
another
goes
record
down.
high
To close,
at
you have to buy. If you buy cheaper, you win.
$4,494.70.
JPMorgan had a
Silver
massive
is the
short position
standout,
going back
up
years.
over
Silver went
6%,
from 30
gaining
to $122,
$4.66 to
300%.
reach
They were trapped, losing
$81.32.
billions. And
That's
suddenly,
significant
in one
because
day,
silver has
the
never
price
held above
drops
$80 for
31%,
this long
and they buy
in
at
its
the exact
entire
bottom.
history.
Perfect timing.
Earlier
Perfect
today,
price.
we briefly
Analyst
saw prices
Maximilian
spike above
Bonkowski called it a
$83,
brutal rescue
nearly touching
operation.
$84,
I have another name
but
for
only
this,
for a short
but I'd get
window.
my channel banned.
Now, silver is holding firm
And
above
before you tell me this is
$81,
conspiracy,
and that's a
that
big
Carter
deal.
sees ghosts, that these
Platinum
are
is
internet
also
theories,
surging,
let me
up
remind you of something that happened 5 years
6.55%
ago.
today,
In
gaining
September 2020,
$149 to trade
JPMorgan
at
chased paid $920 million to the U.S.
$2,434.
Department of Justice,
Palladium
the
is up
CFTC,
5.6%,
and the SEC.
and rhodium is
$920
comfortably
million.
above
That's not a
$10,000
mistake.
an ounce
I
after a
didn't get the number wrong.
$200 move today.
$920 million
These gains
in fines.
reflect ongoing
Why?
supply chain
For manipulating
disruptions
the precious
particularly in silver, platinum, and palladium.
Placing fake orders to move the price
Meanwhile,
and then canceling
Trump
them
has
before
again
they
raised the
execute.
idea
They
of the
did it
U.S.
systematically,
acquiring Greenland.
thousands of times.
Bloomberg
for 8
reported that
years.
such move
And
could
they didn't just pay
effectively
the fine.
dismantle NATO.
2 JPMorgan
China and
traders
Russia
went
have
to prison.
criticized U.S.
Michael
actions in
Nowak,
Venezuela,
head of the global
but
precious
China may
metals
interpret
desk,
this as
the
a
number
green
one
light
guy in the
to
division,
escalate its
1 year
stance
and
on
1 day in
Taiwan.
prison, plus
Add to that the political
$35,000 in
instability
fines.
in Iran following
Greg
last
Smith,
summer's
executive
U.S.-Israel
director, 2 years in
airstrikes,
prison plus
growing
$50,000
unrest,
in fines.
and
They went to
speculation about
prison for
possible exile
manipulating the
plans
silver
for
market.
Iran's
This
leadership.
isn't theory.
And the
This is
picture
criminal
becomes
history.
even more
It's in
uncertain.
the public record of the
Russia,
Department of Justice.
dealing with its own
These are the
economic
same people who
decline
just
and a
bought
prolonged
$10 billion
stalemate in Ukraine,
silver at the bottom
is
of the
watching
biggest
all of
crash in
this
45
closely.
years. But don't
Precious
worry,
metals
I'm sure
traders are
this time it's
factoring
all a
in all of
coincidence.
these risks,
You know what's
far
the most
more
ironic part
seriously
of all
than
this?
stock
You're
markets
gonna
appear
love
to be
this.
doing.
JPMorgan is the
Now,
primary custodian
one key
of
question
SLV.
remains.
What's SLV?
Is this
The
rally
largest
being
silver
driven by
ETF
fundamentals
in the world.
or by
When you
speculation?
buy shares of SLV,
Margin
thinking you're
hikes by the
investing in silver,
CME and other
that
exchanges
ETF
suggest
supposedly has
authorities are
physical
trying to
silver
flush
bars
out
stored somewhere.
speculative
And guess
excess.
who stores those bars?
But silver holding above
JPMorgan. They're the
$81
custodians.
tells us something
They
deeper
hold the
may be
physical metal
happening.
that supposedly backs
We
the
are
shares
now
you buy.
extremely
They hold
close
the
to
metal.
setting a
They
new
trade in the
all-time
futures
high
market.
for
They
silver.
have massive
If
proprietary
current conditions
positions.
persist,
And
a
they
new
just
record
closed the
high could
biggest
very
short
well
position in
happen this
history
week
by
here in
buying exactly when
2026.
SLV investors
According
were
to
panic selling.
Kitco,
It's like the
Secretary of
referee
State
of a
Marco
soccer match
Rubio
also
has been
playing
placed in
striker for one of
charge
the
of
teams,
overseeing
and
economic
also
and
betting money on
political
the outcome of the
reforms
game.
in
And on
Venezuela
top of that,
under
controlling
Trump's
the
direct
electronic
guidance.
scoreboard. But don't
How
worry,
this
the
unfolds,
regulators say
along with
the market is
developments in
fair
oil
and
markets,
transparent.
will play a major
Everyone has
role in
equal
shaping
opportunity.
precious metals
Sure
prices
thing.
going
And pigs
forward.
fly.
Now, let me
Now here's the
explain
part that
why
made me
this
spit out my
coin is
coffee
sitting
this morning.
here. This
The
is a
same
1-ounce
analysts
proof
who last
silver
week were on
American
TV
Eagle
telling
from
you to
the
sell
U.S. Mint.
that silver was going to
I
fall
ordered
to
it when
$50,
silver was
that this
around
was a textbook
$79 to
speculative bubble
$80 an
about to
ounce.
pop, have
It
changed their
cost
minds.
$95,
This weekend,
and that premium is
Marco
almost
Kolanovic,
unheard
the
of for a
strategist who
U.S.
was
Mint
inducted
product.
into the Institutional Investor
Once
Hall
delivered,
of Fame, who
the
worked
premium was
16 years
roughly
at JPMorgan, who
$14.
predicted the crash
That's
and said
extremely
silver could
rare.
fall another 50%,
Why did I buy it?
now says he's
Because
tactically
premiums
bullish.
are going
He
higher,
flipped his
no
position.
question about it.
After the crash,
The U.S. Mint has
Peter Brandt,
already
a
postponed
commodities
proof
trading
silver
legend with
Eagle
50 years of
releases,
experience,
and when
the man
pricing
who called the
updates
silver
hit in
top in
2026,
2011, who
I
last
wouldn't
week
be
was comparing
surprised to
this
see
rally
these
to
coins
that bubble,
priced at
also changed.
$150 or
Now he
more.
expects a short-term bounce.
This coin represents
Curious,
the end of
isn't
an
it?
era.
Both of them
Late
changed after the price dropped,
2025,
after
when you could
retail
still
sold,
buy a proof
after
silver
JP
Eagle
Morgan
for
bought at
under
the low. The
$100.
bears turned bullish
Yes,
exactly when
mint
the smart money
premiums are
finished
still
accumulating.
outrageous,
It's
but
almost
they
like
haven't
were
caught up with
coordinated.
market
It's almost like
volatility
the
yet.
timing was too
That will
perfect to be a
change.
coincidence.
These are
It's almost like the
fascinating
narrative
times
changed
for silver.
exactly when it needed
While
to
it's
change.
exciting to see prices
And it's not
rise
just
this
them.
fast,
JP
it also
Morgan Private
signals that
Bank is
something
maintaining
deeper
its
in the
target of
system is breaking.
$6,500 for
And
gold
that's
by
exactly
year-end.
why we hold
Grace
gold
Peters,
and
their
silver.
global strategist, was on CNBC this morning saying gold remains the best geopolitical hedge. Deutsche Bank and Societe Generale see 6,000, Goldman Sachs 4,900. All bullish, all maintaining their projections despite the crash. The same people who told you to sell on Thursday are now telling you the target is 6,500. Think about that. Why are they keeping their projections? Because the fundamentals haven't changed. Not a single one. China has been restricting silver exports since January. COMEX inventories have dropped 70% since 2020. Fresnillo, the world's largest miner, just cut production. Central banks bought 863 tons of gold in 2025. None of that changed because Trump nominated some guy for the Fed. Now, to be fair, the counter-argument, Christopher Forbes from CMC Markets says this is a classic correction, and he's partially right. Silver went up 264% in a year. Parabolic markets correct. Always. It happened in 1980. It happened in 2011. Chinese speculators took profits. The dollar strengthened. Leveraged positions got cleaned out. All of that is true. But then, explain to me why JP Morgan closed shorts at the exact low. Explain the 40% premiums in Dubai. Explain why the bears are now bulls. Explain the $60 billion in emergency Fed funding. A healthy correction doesn't need $60 billion bailouts. It doesn't bring down banks. It doesn't cause 40% premiums between paper and physical. What happened Friday wasn't a correction. It was a wealth transfer. Organized, executed, completed, in 48 hours. So what comes next? I'll tell you, because this isn't over. Today, Monday, after the U.S. market closes, the new CME margins go into effect. The second increase in 3 days. Tomorrow, Tuesday, when markets open, traders who survived Friday are going to receive new margin calls. Those who don't have extra capital are going to get liquidated. Another round. There's going to be more volatility, possibly another drop, possibly another bounce. possibly another day of 8% up or down. The key technical levels I'm watching are 4,600 in gold, which is the critical support according to Pepperstone, and $80 in silver. If those levels hold over the next few days, the bounce could continue toward 5,000 in gold and 90 in silver. If they break to the downside, we could see another leg down toward 4,200 in gold and 65 in silver. Be prepared for both scenarios. So what's Carter doing? I'll tell you because I'm not some guru charging $5,000 for a course telling you what you should do. I'm a guy who puts his money where his mouth is and tells you his real strategy. I distinguish between the price on the screen and physical reality. The screen says $78 per ounce of silver. If I try to buy a physical ounce of silver today, a coin, a small bar, something I can touch, I'm going to pay $120 or more. The premium is $40 over spot. That tells me the screen is lying. The screen is the paper price. Paper is a promise, a contract, a number in a computer. Physical is an atom. It's real. It exists. It doesn't depend on a bank keeping its word. Atoms don't go bankrupt. Promises do. I didn't sell Friday. I didn't sell this morning. I'm not going to sell tomorrow. Because I didn't buy paper to trade and brag about gains on Instagram. I bought metal to protect myself from exactly what's happening. From a financial system that needs $60 billion emergency injections to avoid collapsing, from a national debt that grows $8 billion a day, from a systematic wealth transfer from those who don't know to those who do. And look, this isn't financial advice. I'm not your advisor. I don't know your situation. I've got family. I've got savings. I've got a mortgage. I've got the same bills you do and the same worries. I'm not telling you to do anything. I'm telling you what I'm doing and why. And above all, I'm telling you what just happened. $15 trillion changed hands in 48 hours. JPMorgan bought $10 billion at the exact low. The analysts who told you to sell are now telling you to buy. The paper price says 78, the physical price says 120, a bank failed, the Fed stepped in with 60 billion, and tomorrow there are more margin calls. The question isn't whether gold is going up or down tomorrow. Nobody knows that. The question is simpler, more fundamental, more important. When the screen was screaming at you to sell, when panic was at its peak, when everything seemed to be crumbling, when the headlines said it was over, did you listen to fear or to fundamentals? Because those who listened to fundamentals did exactly what JPMorgan did. They bought the low. And those who listened to fear sold them their position at a 30% discount. They gave away their silver. They handed over their gold. They surrendered the keys to their financial future for nothing. That's how this works. It's always worked this way. And until you understand that, you're going to keep being the one who sells when they buy, the one who panics when they accumulate, the one who watches the screen while they watch the vaults. The 15 trillion didn't disappear, it didn't evaporate, it didn't go to heaven, it changed pockets. And the only question that matters is whether next time you'll be in the right pocket.